Meet our free US tax preparation course brought to you by the Borderless Accountants. Now, on its first month, we are inviting you to join our community. Live training, reputable tax firms as resource speakers, recorded, replayable at higit sa lahat, libre. To join, like and follow our official Facebook page, join our Facebook group for important updates, and fill out our Google form to be included in our mailing list. See you there!
All right, so congratulations to our top notchers today, Rachel, Nora, and who was the other one? Eleanor. Good job, guys. And I think there were 20 questions today, right? So there's quite a lot. Question number one, a taxpayer visits your office and admits that they haven't filed tax returns for several years. They explain that one of the reasons is they lost their W-2 forms. As a taxpayer, what should you advise the taxpayer to do? What is the most appropriate advice you should give to the taxpayer? Right, we've tackled this already in our session, and the answer was to advise the taxpayer that he or she can obtain a wage and income transcript from the IRS. Right, that should show the W-2 issued under his social security number. All right, good job. There were 88 minutes. We have about 9 out of 10 got the correct answer. Good job. Next is, what is the deadline for employers to file Form W-2 with the Social Security Administration and provide copies to the employees? The answer is January 31st. Right, so we got 76% accuracy rate. So some of you answered April 15. Too late na yan, but April 15, because April 15 is tax filing deadline. The deadline again is April 15. So if the W-2 is issued also on the same date, it will be too late. All right. So it's usually January 31. January 15 also too early. But yeah, you may have been you may have gotten confused with the W-2 deadline with the tax filing deadline. Next question, which box on Form W-2 shows the amount of Social Security tax withheld? Right, so that would be on box 4, right? So box 4. Box 3 would be the Social Security amount basis, right? But the withheld amount is shown in box 4. So of you answered box 3, and then there's box 5. Box 5 is is the basis for the amount for the Medicare withholding, right? So box 4 would be the amount withheld for Social Security, right? 44%. Next is, a waitress works at a busy restaurant and regularly receives cash tips directly from customers. He asks you, as her tax preparer, how these tips should be handled for tax purposes. How should the waitress report the tips she receives? Right, so remember that all tips are taxable. There may be an amount that's a threshold for reporting, about I think $20 if I'm not mistaken, but the entire amount, regardless of the amount, is taxable. So the waiter should report all tips to her employer as they are considered taxable income, right? So, but I doubt people would do this, especially if the tips are in cash. Although in practice, really, it's very limited, I would say, is few people are using cash in the US. They use card or Apple Pay. I use Apple Pay when I make payment. So, and tips are usually also through the Apple Pay or credit card. So those gets automatically reported to the employer. So I guess this question applies when the tips are in cash. So yeah, some of you answered only tips over 100 per month needs to be reported. Actually, the amount for tips to be reported is $20 and above. Okay. But again, even if it was not reported to the employer, it doesn't mean that just because it was not reported that it's not taxable. It should still be taxable, right? So 68%, not bad. Question number 5, what does box 6 on Form W-2 report? So this is for the Medicare tax basis. Sorry, Medicare tax withheld, which is was it 1.4? 1.4, right? An additional 0.90% if the salary reach about $200,000. Right. So how many people got the correct answer? On the able to scroll. Right, 64%. So some answered state income tax, federal income tax withheld. All right. So for those who were not able to get the correct answer, go back to your W-2 and familiarize yourself with the boxes. Okay. So box 1 to 6, that's related to a salary, box 1 being the gross wage, box 2, the federal tax withheld amount, box 3 would be social security amount basis, and the box 4 would be the social security tax withheld. Box 5 would be the Medicare tax basis, and box 6 would be the Medicare tax withheld. So if again you got it wrong, go back to it, because if you don't know it by heart, I would say you're missing on a lot, right? Because again, basic on W-2, right? And it's one of the most important and most common document there is. All right, next is what is reported on box 8 on Form W-2. That's the allocated tips. And how many got this one? 36%. Okay, this was the toughest question. It's only 36% of you guys got it correct. Box 7, so question number 7, an employee notices an amount listed in box 10 of their W-2 and isn't sure what it represents. As a knowledgeable taxpayer, how would you explain the significance of the amount in box 10? So box 10 represents the value of dependent care benefit provided by the employer, and some of those would be excludable from the taxable income. Although this question, I don't know if it really is applicable in real practice, because as a taxpayer, the taxpayer already knows that part of his or her compensation package is a dependent care that be provided by the employer. Dependent care could be like a daycare, or it could be a subsidy amount, for the child care, and it's part of the compensation. So, and a part of that would be taxable, and part of that is non-taxable. Again, the employee who is a taxpayer in this case likely knows about that already. But in this question, just to satisfy this question, this one is, yeah, the value dependent care benefits provided by employer, which may be partially excludable from taxable income. And yeah, half of you got it right. Question number 8, which of the following best describes the information shown in box 12 of form W2? So this is the employer and employee contribution to benefits and compensation plans identified with letter codes. Yeah. So this is a box 12 where we have box C, box D, box D, D, could be W. So kung maraming contribution sa employer and sa employee towards retirement plan and healthcare plan, and marami din kayo makakita dun sa box 12 ng W2. Right. 72% got it right. Very good. Then let's proceed. Question number 9. One second. Some of these questions are not in the EA exam. Some of these were drafted by Marilu, the ones doing the questionnaire. So yeah, especially the W2 ones. These are not in the EA exam or EA test bank. So while reviewing a client's form W2, you notice several codes listed in box 12. Why is it important for a taxpayer to accurately interpret the entries in box 12? That's because each code represents specific types of compensation or benefits that can affect taxable income, deductions, or credits. To be honest with you guys, when I was doing tax returns before, I didn't know what those codes are for, right? So in-input ko lang siya sa return, but I didn't fully understood how those relate to the tax return, right? Only a few years after, when I come across a client na merong tawag dito. This actually has to do with yung client asking how he or she can minimize her taxes for the following for next year, right? So kasi dun sa box 12, that's where we see the contribution to 401k, right? And I think I've mentioned this to you before, that there is a maximum amount that a taxpayer can contribute to the retirement amount or retirement account, and that a maximum amount is non-taxable, right? So most of taxpayers do not maximize their contribution, right? So if they don't maximize their contribution, they are missing out on one, the benefit of the retirement. The second is they're missing out on the benefit of minimizing their taxes, right? So yun. Because of course, some people would like to have a greater amount of net pay. Kasi yung contribution towards the retirement plan, dinideduct din yan sa sahod mo. So, kung you max it out, that means kukunti lang din yung receive mo during your payday, right? But again, most of the taxpayers have multiple jobs, so they can afford to maximize their 401k contribution. And for those may 401k, they're likely employed by really good employers. So pag employer niyan ay Meta, Alphabet, which is Google, Amazon, the big tech, they likely have when you look at their W2, they likely have so many boxes on so many codes on box 12, right? So ask lang kayo kung may mga clarification kayo. Then Question number 10, a tax preparer is assisting a client who lives and works in a state that requires accurate entries in specific state-related boxes on the W-2. Why is it important to ensure that boxes 15 through 17 are correctly completed for this state? Right, so I think it might be worth to show the W-2 again, no? Because I realize marami pa sa inyo hindi solid sa W-2, ano? So the previous questions were related to this one, right? Box 1, 2, 3, 4, 5, and 6, right? And then this is what we were talking about just a few minutes ago, the box 12 with code C and DD. And then for this question, this is what we're talking about, box 15, where you have the state withholding, right? So it's important that you're familiarized or you're familiar with the boxes because it's going to be, kapag nag-usap kayo ng employer in the future, he would just refer to the box, right? He may have a comment on the return and say, hey, box 12 of or box 15 of the tax return or of the W-2 was missed out, right? So pag sabi niyang box 15, alam niyo na, that's the state withholding, right? So for this question, how many got the correct answer? 76%. Good job. Bilisan lang natin, kasi lumiliwanag na sa aking paligid. It's almost 6. Question number 11, a client asks you, the tax preparer, how can I minimize my taxes? So this is similar to what I said earlier. The answer to this question is, let's check if you've maximized your 401k contributions. This can reduce your taxable income next year. What were the other choices? You can adjust your reported income to pay less taxes. That's wrong. You can look into tax credits you may qualify after filing. This could be right. But I think the question is most appropriate, right? And then last item was, there's nothing wrong we can do it. There's nothing we can do at this point since the year is already over. If you're blatant about it, you can answer this. You can give this answer to your client, but if you answer this, if you give this answer, you would likely lose that client for next year. Right, so 68%. Good job. Question number 12, from W-2 box 12 may include code D. What does code D represent and how does it relate to box 13? By now you would already know it, right? Box D is the 401k contribution or the retirement contribution. 70%. Good job. Box 13, a tax preparer is reviewing a client's form W-2 and notices that an amount reported in box 12 with code D indicating 401k contribution. However, the preparer fails to check the retirement plan box in box 13 on the return. What is the possible implication of this oversight? This question is very good kasi madalas din itong nami-miss out talaga. This box here, 13, dapat yan may retirement plan naka-tick mark or naka-X. Yung may box D dito or my code D sa box 12, right? And because it's so easy to miss, na even when I was starting, nami-miss out ko to. But so far with my staff, I've been noticing that they've been very consistent in making sure that this one gets ticked, right? Because if that is not appropriately marked, it will cause an issue on the calculation of taxes by the tax software, right? So maaaring hindi i-exclude ni tax software yung contribution for the year, right? Moving on, question number 14, a client is planning to withdraw funds from their health savings account to cover medical bills. As a knowledgeable tax preparer, how would you evaluate the situation and advise the client to ensure proper tax reporting and compliance? So, pag may nakita kayong ganito, na may withdrawal from health savings account, although we haven't covered this yet because hindi pa naman tayo nag-1099 HSA. We just need to confirm that the proceeds were used for medical purposes. Otherwise, ita-tax yun ni IRS and may even be incurring some penalty. Okay, so just confirm that it's for medical purposes. And then last sixth question, question number 15, a taxpayer works as an independent contractor and earned income from multiple clients throughout the year. What tax form will they receive to report this income? So it's a form 1099 NEC. The NEC here stands for non-employment compensation, right? So instead of a W-2, good job, 84% got it right. Next, which of the following best explains the difference between W-2 and a 1099 NEC? So the answer is W-2 is for employees and NEC is for independent contractor, right? 88%, good job. Proud of you guys. Last four, which of the following workers would most likely be classified as a statutory employee under the US tax rules? So I think I gave this out as well in the previous session. The answer to this is a full-time driver who uses the employer's vehicle to deliver goods and is paid a regular wage. Right, so kaibahan lang ng statutory employee versus a regular employee is that the employer does not withhold taxes, right, on the pay ni employee, right? Para siyang contractor. However, kaibahan naman niya sa contractor is that nagwi-withhold si employer ng Social Security and Medicare. So parang hybrid nga yung statutory employee between a regular employee and a contractor. Right. Let's move on. Question number 18. As a tax preparer, a client hands you several W-2s from different employees. What is your primary responsibility regarding these documents when preparing their federal tax return? The answer to that is that you have to report the information from each form W-2 separately on the tax return. So lahat dapat yun naka-report. Hindi ka pwedeng mamili lang doon. Right? So I hope you got it all right. 80%. Some answered, add the total income from the W-2s and enter it as single line item on the tax return without reporting individual details. Hindi po ganun na. So kung like multiple, like for example, may dalawa or tatlong W-2, dapat lahat ng W-2 na yun, ini-enter nyo isa-isa. Hindi siya pwedeng i-total lang. Okay? Kasi magkakaiba yung details ng W-2. Magkakaibang employer, magkakaibang employer identification number, magkakaibang withholding basis, and boxes of boxel. Basta dapat makaisa-isa siyang input sa tax return. Okay? So hindi dapat siyang tinototal. All right, last two question. Your client lives in New Jersey and works in New York and receive W-2 showing income and earned in New York with state taxes withheld for that state. As a tax preparer, how should you handle this multi-state tax situation? So in this case, since residential in New Jersey, he has to file a Jersey resident return and New York non-resident return. Hindi pwedeng dalawa yung residence. Pwedeng dalawa pero part year resident. Okay, so in cases na, kunyari, first 4 months of the year nag New York siya. Tapos the remaining months of the year, taxpayer moved to New Jersey. So pwedeng both are part year resident. Okay, but hindi pwedeng both are full year resident. That cannot be. Okay. So 60% got that right. Good job. And then last question. Your client has a form W-2 from different employees. How should you handle this in the federal return? I think that's repeat na tong question na to. So we have to report it separately. So dapat again nakatotal. All right. So just like that, you've been 15 minutes. Right. And I cannot afford to stay longer today. We may extend until like 9:30 your time. Kasi naka-Starbucks lang ko, naka-park lang ko sa road. And mahal ang parking dito, guys. So pag inabot ako ng 8 in the morning, I'll have to pay for the parking. And maximum 2 hours on yung parking. So I have to go. All right, before we proceed, my question dito. Sir Chris, kung sa Roth IRA, nag-contribute, ito po ba yung be deductible? Pero kung sa 401k, ito ba yung deductible? Or baliktad? I'm not gonna answer this right now, Ms. Min, because we have a different section for retirement. Magkakaiba sila, no? Magkaiba yung IRA, magkaiba din yung 401k, right? So there's a complete section dedicated towards retirement accounts. Nasa section 12 siya, individual retirement accounts. If I could just move this into the second screen. And magandang aralin din tong mga individual retirement accounts. So ito, lesson 12 ng GLIME, individual retirement accounts. Andyan naka-detail yung mga various options ni employee to avail of retirement accounts. Okay, so as promised, we'll finish gross income today. There's very few videos remaining. And then there's another one after this, which is a specific section on gross income for interest, securities, and decedent. So dito na papasok yung 1099 INT and mga brokerage statement. So tapusin natin itong 2 sections and we'll then proceed with actual inputs na mga tax forms for the gross income. Okay. And then the rest deductions na yun. So let's get going. I think this part six. Actually. Am I sharing my audio? Let me stop sharing.
There's a lot of questions that come up in practice about Social Security income and whether or not it's taxable. And answering that question.
Hold on to this part. For those who need to go, you can go. Just watch the replay. But for those who want to stay again,
let's take a look at a couple of other unique circumstances that pop up for gross income. First, let's cover scholarships. Scholarships and fellowships are generally excluded from gross income, but the funds must be used for qualified education expenses, which are costs such as tuition, books, and supplies. What's not included in the definition of qualified education expenses here is room and board. Now, if you receive a scholarship in exchange for teaching a class or conducting research, this is really compensation.
Coach
and
Chris,
even if
hindi
the
po
funds
share
are
yung
used
screen
for
nyo.
qualified education expenses,
I'm
the
sorry.
scholarship would still be taxable. Now, most educational institutions also offer tuition remission to their employees.
Ano ba yan? Hindi pala naka-share. Sorry po.
Subsistence.
Okay.
Companies work
Maximize.
diligently to find creative ways to reward their employees. Often there are
Do you see
incentive
this now?
programs set up that don't necessarily reward employees with money. It might be a tangible
Coach.
prize
Pero
and
baka
may
pwedeng
need to be
ibalik,
included
Coach.
in the employee's
All right,
gross
let's
income
go
of
back.
qualified education expense. Fellowships are Let's take a look at a couple of other unique circumstances that pop up for gross income. First, let's cover scholarships. Scholarships and fellowships are generally excluded from gross income, but the funds must be used for qualified education expenses, which are costs such as tuition, books, and supplies. What's not included in the definition of qualified education expenses here is room and board. Now, if you receive a scholarship in exchange for teaching a class or conducting research, this is really compensation. And even if the funds are used for qualified education expenses, the scholarship would still be taxable. Now, most educational institutions also offer tuition remission to their employees, which is excluded as a non-taxable fringe benefit. We should also note subsistence payments from Veterans Affairs, or the VA, are excluded even though they are used for room and board, i.e. subsistence. Companies work diligently to find creative ways to reward their employees. Often there are incentive programs set up that don't necessarily reward employees with money. It might be a tangible prize and may need to be included in the employee's gross income for tax purposes based on the fair market value of the prize. There are a few exceptions when the prize is not required to be included. The first is sometimes called the Nobel Prize exception and has a few criteria shown in your GLIME knowledge transfer outline. Another exception might be that the prize or award is excluded from gross income under the scholarship provisions. Lastly, perhaps the most common is the achievement award exclusion. These have some dollar amount thresholds, however, to consider as shown in your GLIME knowledge transfer outline. But the dollar amount is based on the cost to the employer, meaning you can't give cash to the employee under these amounts and still be considered for exclusion. The prize has to be a tangible piece of property. It can't be cash or even a cash equivalent like a gift card. The good news is if the prize or award goes over these limits, it's only taxable to the extent that the amount is over that limit. It is unfortunate, but it does happen. I've had my clients, a fair share of my clients, that have lost their jobs and they've had to go on unemployment. It's a tough conversation, but unfortunately, employment benefits are included in gross income. It does not matter if the payor of the benefits is some level of government or a private supplemental plan. Similar to unemployment benefits are strike benefits. They are similar in that the taxpayer is not working. Here, the union is paying the taxpayer because of a labor dispute. At that moment of time, the employee's job is to be on strike, right? As a result, strike benefits are also included for gross income. There are a wide variety of remedies folks might receive if they are injured or become ill. The best way to approach this is to manage by exception. And what I mean by that, the amounts are gross income and then work backwards from there to see if any exception applies. Take a read through the list abbreviated here and view the more detailed list in your GLIME knowledge transfer outline. My question to you is, do you notice a theme? Most of these are exempt because they are making a person whole from what they have lost. There are some exceptions, but this observation gives us some perspective on what the gut feeling is that you need to develop. We see then the opposite theme for what must be included in gross income. These items don't necessarily represent a tangible loss. All right, fun story for you. So let's say that you're skiing on the gorgeous slopes of Park City, Utah in December, and you suddenly find yourself in need of emergency medical treatment due to a concussion. True story. You have health insurance, but maybe you don't have your health insurance card with you, and you end up paying for the emergency room out of your own pocket. Depending on your situation, you might be able to deduct the cost you pay out of pocket on your tax return. If you're then subsequently reimbursed by health insurance for the out-of-pocket expense in a later year that you deducted on a previous year's tax return, the situation is normalized by including the reimbursement to gross income. This is known as the tax benefit rule. All right, now let's say in this scenario that my employer has a special accident and health plan fund that reimburses me for out-of-pocket costs such as the copay that went along with the accident. These reimbursements are excluded from gross income, assuming the reimbursement does not exceed the actual expenses. Disability insurance kicks in when an employee is unable to work due to becoming disabled. Commonly, you'll hear about short-term disability coverage or long-term disability coverage. The most important fact to determine is if disability insurance is includable for gross income is the question of who paid the premium. This introduces a very important concept for us, which is before tax and after tax dollars. If the employer paid the premiums for the employee is receiving a benefit that they never paid tax on. As a result, the payments are taxable. If the employee uses their own money upon which they have already paid tax, then the benefits are not included in income. One of the more popular benefit packages that employers offer nowadays is dependent care. If you're not familiar, trust me, my friends, when I tell you, daycare is very expensive. So in an effort to maximize employee recruitment or retention, employers may offer substantial benefit as shown here.
Okay, this is what's on the box 10 the W2. Okay. This is what we're talking about earlier.
A very common benefit we all may offer.
So up to 5,000 is excluded from the benefit. Anything that exceeds that is taxable on the taxpayer's return.
Substantial benefit as shown here. A very common benefit we also see is something called group term life insurance. In these policies, the employer pays for life insurance coverage of the employee for a fixed term of typically 1 year. The premium on up to $50,000 of coverage is excluded from the employee's gross income, even though there is clearly value and economic benefit. If the policy exceeds $50,000, the premiums paid in excess are taxable. We should also note contributions to an employee's long-term care coverage policy are also non-taxable. Thanks for watching.
All right, so takeaway from this material, I'll share with you 2 common forms that you will encounter. One of which is the form 1099-Q, right? So this is a payment for qualified education program. Usually, if may makikita kayong Plan 529 that relates to educational plan na kinocontribute si taxpayer. And that's usually, or actually that's a state deductible contribution. So dapat lagi niyong i-search kung anong state si taxpayer kapag may 529 contribution siya. Because again, it's taxable to the state, not on the federal level. And then if there are distributions from that plan, the client or the taxpayer receives a 1099-Q, right? So of course, we enter this into the tax software. I'm not sure how to enter this in ProConnect. Let's check. Kung may specific provision ba siya. But one thing that you need to know is you have to confirm with the client that the distribution was used for a qualified educational expense for it not to be taxable. Okay? Para siyang HSA din, HSA na distribution. Right? So let's see how that gets entered in ProConnect. There. So education expenses, follow nilang tong boxes na nandito. And then may mga set of questionnaires yan. When you fill this out and you check the return, there will be a form that will get attached, which you will have to answer to make it known to the IRS that the distribution on the 1099-Q was used for qualified medical or qualified educational expenses. Okay, we'll tackle that in details as we go along. And the next form that you need to know, based on the resource material that we just watched, is a 1099-G. The 99G, this is what the taxpayer receives kung may unemployment benefit siya, right? So if, at some point the taxpayer lost his job, right? The federal government provides for him an unemployment compensation, right? Although may limit yan. But then, as far as we're concerned, taxpayers, when we receive a 1099-G, we enter that into the tax software because it is a taxable income, okay? As what the speaker has already explained earlier. Yeah, so that's for this topic. Marami pang iba, but those are the most common ones. Okay.
Let's go through some more items that might or might not be in gross income. First, let's hit pensions. Pensions are payments to an employee in retirement. Now, sometimes an employee contributes to the pension fund along with the employer. If the employee used money that they've already paid tax on for his or her contribution, he or she would be able to get that money back. We call this concept the tax-free return of capital. Now, while we lay the best plans out for retirement, sometimes taxpayers need to take distributions early. In this case, the distributions are tax-free to the extent of employee contributions first and then go taxable. Some plans have the ability for employees to retire early on disability. In this case, the payments are taxable as wages as if the employee was still working. Note there are some special rules that come up for foreign pensions that happen occasionally. Please check out your GLIME Knowledge Transfer Outline for more detail on those. Death benefits on an employer-paid plan are taxable because the employee never paid tax on the benefit of having the policy premiums. Note this is different than life insurance proceeds. Another oddity that comes up is around something called a parsonage. Members of the clergy are often permitted a housing allowance as part of the compensation package with the church. The house, when located on church grounds, is known as a parsonage. Today, we don't often see a true parsonage, but the tax code permits an exclusion from gross income based on the smallest of these factors here. This is an exclusion from gross income for income tax. Self-employment tax still applies to the excluded amount. When it comes to the combat zone pay that our brave members of the armed forces may receive, the tax code excludes it. There is a difference between officers and enlisted on the exclusion. In effect, enlisted personnel have no limit, and officers are limited to the exclusion based on the highest enlisted combat pay that is available. Gifts and bequests are excluded from gross income as well under the tax code. But interestingly, if a taxpayer were to find money, it's taxable. Found money is called a treasure trove. And something similar to found money could be gambling. Gambling winnings are taxable. Now, you can use gambling losses in a given tax year to offset gambling winnings, but only if the taxpayer itemizes instead of taking the standard deduction. There is no carry forward or carry back of gambling losses from one year to the next. So this one is often called the tax benefit rule and looks to see if the taxpayer took a deduction in one year and then received reimbursement for the deduction in a subsequent year. Instead of the taxpayer amending the prior return, this is effectively a true-up process, if you will. Only active members of the armed forces may exclude reimbursements for moving expenses. This happens typically when someone is deployed to another base. While private citizens may receive a moving allowance to accept a new corporate position per se, it is includable for gross income. Employers may set up an adoption assistance program where qualified adoption expenses are paid out directly to third parties like adoption agencies, or employees are reimbursed for these expenses. There are very specific rules listed here and in full detail in your Gleim Knowledge Transfer Outline. There is a maximum amount that a taxpayer may exclude each year. The maximum exclusion changes each year for inflation, so please review that figure as well. Note there is a phase out of maximum exclusion based on the taxpayer's adjusted gross income. There are also reductions to the maximum exclusion to the extent the taxpayer takes advantage of the adoption credit as well. All right, so let's say that a taxpayer's house is damaged by an accidental fire. If insurance steps in and provides the taxpayer with funds to stay in a hotel temporarily while the house is being fixed, these funds are not gross income. Thanks for watching.
Right. So takeaway from this lesson, common forms that you encounter would be a Form 1099-R. So a 1099-R is for whatever retirement distribution that the taxpayer received during the year, right? And in this form, the most important thing, or one of the most important things to look at, would be box 7, which is a distribution code. So the distribution code would tell you what the distribution was for, right? Was it an early distribution? Was it normal distribution? Was it because of death? So that's very important because that determines also the taxability of the distribution. Okay, and a lot of tax preparers make a mistake on not putting anything on box 7, right? So it is very important to make sure that all the boxes that were filled out in the form are also entered into or are reflected into the tax software. Okay, so that's 1099-R. Again, we will cover that and we'll have an actual entry of this form into the tax software, hopefully this week. All right, another form that relates to this topic is a Form W2G. The W2G naman, this is for gambling winnings, all right? So this is usually like, if madalas sa Las Vegas yung taxpayer, yung mga casinos doon, at the end of the year, W2G, usually this is given, on the actual distribution ng winnings ng taxpayer. So hindi na hinihintay ni taxpayer yung end of the year for this to be issued, right? So in-issue agad ito ng what do you call them? Yung mga casino or anything similar to that. So winnings and losses can be offset against the winnings. Okay, so pag naka-receive kayo ng ganito, wag niyo lang basta-basta i-input yung winnings because it would add up to the gross income ni taxpayer. Ask them kung how much was the loss for the year applicable to the winning. Okay, so kung mas malaki yung losses kaysa sa winnings, yung deduction ng loss would only be limited up to the winnings. Okay, so like for example, yung winnings were based on the W2G was like $10,000, but yung losses niya throughout the year was actually 15,000. So he can only deduct up to 10,000 lang, right? Because that was the amount of the winning. All right. And then let's continue. Meron tayong 15 minutes. May mga tanong ako kayo, clarification lang nyo. Actually, 3 more videos ko pala ito. Pero mas short lang to. Let's try natin itong isa. And then maybe tomorrow we can cover the remaining 2. So imagine 2 out of 14 na kayo sa EA na material.
There are a bunch of benefits an employee might enjoy as part of his or her position. Many of these can be excluded from gross income, so let's take a look. It's actually very common for an employee to use his or her own money and pay for business expenses for his or her employer. My first job was in retail, and Thursday nights were our busiest night. The owner of the store would let us order pizza for the crew that was working that evening. On occasion, he was out of town and we would have to pay for the pizza out of our own pocket, but as long as we kept the receipt, he would always reimburse us. Now, is that really income for me? No, of course not. I'm simply being made whole. The important key here is to keep your receipts. This is known as an accountable plan. Best tip I could give you, my friends, always keep your receipts. If the employer gives us too much, the excess must be returned or it is included in gross income. Some professions require a path of residency in order to complete it. Think physicians, where they must complete a residency where they effectively live at the teaching hospital in order to complete their training, with the residency lasting anywhere from 3 to 7 years. Clearly, the housing is a personal benefit, but the tax code permits an exclusion from gross income so long as the employer pays, the employee pays over 5% of the fair market value of what the rent would be on the housing. Another popular one is fringe benefits, and fringe benefits can be very valuable to employees, and they frankly help with recruitment and retention. The right fringe benefits can actually be excluded from the employee's gross income. No additional cost services can be for the employee, their spouses, and dependent children. The term no additional cost applies to the employer. So let's say our client works for the local internet service provider. The client is entitled to free high-speed internet and all television channels as a free perk of working there. There's really no additional cost to the company, and as long as everyone is entitled to the perk as an employee, the employee would not include it in their gross income. Some companies offer employee discounts as perks. Essentially, the company must break even in the case of products or offer 20% off in the case of services. Again, similar to no additional cost services, the perk must be offered to everyone. Working condition is very business specific. The cost must be ordinary and necessary for the business and related to the employer's trade or business. You'll see this a lot with vehicles, and there is an annual limit on the value of the vehicle when it is first made available to the employee. This amount gets adjusted every year for inflation, so check out your GLIME Knowledge Transfer Outline for the most up-to-date amount. I have a friend of mine who is a police officer. She gets an unmarked squad car as a take-home vehicle because she's a detective and might get called out to a crime scene at any time. She is allowed to use the vehicle for personal purposes because, again, she could get called out anytime. She could be in the middle of shopping and then all of a sudden has to go to a crime scene. Certainly, there is personal benefit to her, but the vehicle is really there for the convenience of the employer. All right, another one for us is de minimis fringe benefits. De minimis is Latin for pertaining to minimal things, and we're talking about really, really small costs here. So let's say that I make copies of my lost dog flyer at work. Did I receive a benefit? Well, sure. If I went to the print copy ship store, it cost me 10 cents a page. Did it really cost my employer all that much? Not really. Now, there are a few other examples listed in your GLIME Knowledge Transfer Outline. Another one we want to bring up, though, is the transportation fringe benefit. Transportation fringe is a big one. There is a monthly exclusion amount that adjusts for inflation each year. So keep in mind, this exclusion is typically associated with mass transit or parking. Employees may take the cash equivalent, but then that cash equivalent must be included in their gross income. All right, lastly, employer-provided educational assistance. This allows the exclusion of up to $5,250 following rules similar to scholarships. Now note, through the end of 2025, an employer may make a payment to an employee's student loan directly, and it would be excluded from the employee's wages. Thanks for watching.
Right. So key takeaway from that is yung because he talked a lot of things, right? But not a lot of those I've encountered personally. But one of the most that I encounter is yung reimbursement. So if again the employee paid an expense on behalf of the employer, and that employee got reimbursed, it's not an income because it's a reimbursement. But if there is an excess and it was not returned to the employer, then that would have to be declared as an income. So for example, nag-trip si employee, right? He was sent to a business trip and he gathered all the receipts, and after coming back from the trip with all the receipts came to about say $1,000, right? And then the employer reimbursed that employee 1,500, right? So the first 1,000 is not an income because it was a reimbursement. The 500 has to be declared as an income because it was in excess of the actual expense. Pero kung yung expense was 1,000, the reimbursement was also 1,000, then there's no income. Okay, yan lang. All right, let's move on.
Let's take a look at a couple of topics related to foreign income. There is an exclusion provision where a taxpayer may be able to exclude a substantial amount of foreign earned income when certain criteria are met. This substantial amount is adjusted for inflation each year, so please check out this year's amount in your GLIME Knowledge Transfer Outline. In order to hit this exclusion, the taxpayer must have foreign earned income, a tax home in a foreign country, and meet one of the criteria you see here and in your GLIME Knowledge Transfer Outline. When would this happen? Well, many global companies and international accounting firms ask their employees all the time to go on rotation. When this happens, the taxpayer is out of the country for months at a time, but may occasionally make trips back home for, say, holidays. In that case, criteria 3 is likely met. Now, a full year is a really long time, and I can tell you in practice, I've never seen a clean start and stop right on January 1st through December 31st. Typically, these situations span a couple of tax years. Maybe it starts right in the middle. As a result, the exclusion can be prorated based on the number of days the taxpayer qualifies within each year over a 2-year period. This proration happens on Form 2555. We should also note the taxpayer may not take any foreign tax credit when taking this income exclusion, and any related deductions attributable to the foreign earned income that is being excluded is obviously then disallowed. Lastly, I want to highlight the importance of the name. It's the foreign earned income exclusion, meaning the income must be earned income as shown in your GLIME Knowledge Transfer Outline. So even though the taxpayer might take their wages, drop it in a foreign bank account, and earn foreign interest, the exclusion is only afforded to the wages. Unfortunately, there is no argument to connect the two, even though there seems to be some correlation. The foreign housing allowance has a slightly more involved calculation than the foreign earned income exclusion. So the starting point on this is 30% of the foreign earned income exclusion, so it adjusts every year for inflation as well. The good news is, I guess you really only have to memorize one amount for the exam. The 30% base is for everywhere in the world except locations designated as high-cost locations by the IRS, which includes cities like London and Paris. The amounts for these cities are published each year by the IRS. All right, so there are 3 categories for allowances. The first category is some of the housing reimbursement must be included in income. Question is, well, how much? So this is again based on the foreign earned income exclusion, but is 16% of that amount. So if we think about category 1, That's sort of like a floor, if you will. Once you get over that 16%, we might get into an area that is excludable. This kind of makes sense to me with that first category because a lot of the foreign housing allowance is more of a personal cost than a living expense. All right, second category. Once we eclipse that floor, this is what actually gets excluded. Any reimbursement between the first category and the second category, that's what we're looking to exclude. This is up to 30% of that foreign earned income exclusion. So that's the bandwidth that we're looking at right there. This is the part that gets excluded. It can be different based on those high cost locations as well. Okay, so anything beyond that floor, past category 2, this stuff here is included as the taxpayer's income. There's a great flowchart in your GLIME knowledge transfer outline that really helps walk through these two concepts, so definitely check it out. Thanks for watching.
All right, so little information lang on foreign earned income exclusion. It's not very common, right? Not all firms handle foreign earned income exclusion clients kasi ano siya, para siyang niche, right? There are firms that practice only foreign earned income exclusion kasi it's a different animal. And there are also firms that do not accept clients with foreign earned income or do not accept taxpayer clients with foreign earned income. Kasi kung hindi mo alam yung foreign earned income exclusion through the Form 2555, there is a tendency na magkamali yung tax preparer. And, it could mean that the taxpayer is not able to enjoy the benefit of the exclusion, or it could be na mali yung calculation na instead na tax due ay nagtaig din yung tax refund pa or walang tax na binayaran sa tax payer. Point if hindi lahat ng tax firm nagpa-practice ng foreign earned income exclusion. I've experienced this. Mayroon din kung dalawang tax firm before na yung hinahandle lang na taxpayer clients are expats. Yun yung mga American taxpayers located outside of the US. They're called expats, right? So, case in point, meron akong recently in prepare na return na may foreign earned income exclusion si taxpayer kasi he's based in UAE. And this firm that I'm working for, hindi siya, he doesn't usually handle foreign earned income exclusion, right? Kasi nga, it's a different animal. And so when I was preparing it, the instruction of the firm owner was, I just follow whatever was in the previous year because siguro hindi niya alam I was doing I was already very familiar with the foreign earned income exclusion. So when I look at the previous year, nakita ko na mali yung ginawa nila sa previous years, right? Nag-take sila ng exclusion pero hindi nila dineclare yung foreign earned income. Diba? So dapat naka-declare yung foreign earned income and then i-exclude mo siya. But what happened was that since yung taxpayer may income din sa US, yung income lang sa US yung dineclare and then nag-claim ng exclusion. So, di ba, mali na siya at the onset. So, what I did, I prepared the return as per the instruction. I followed whatever was in the prior year. However, when I submitted the return to the firm owner, meron akong disclaimer. No, I told him that I look at I prepared the return based on the prior year and as per your instruction. However, looks like the foreign earned income exclusion and the Form 2555 was prepared incorrectly. So I detailed what the explanations were. And then I left it to him, kung ano yung decision na whether to go with a return as per prior year or he comes back to me and prepare it as it should be, right? Kasi pag na-audit yun ni IRS, lagot yung taxpayer kasi in the prior year, wala siyang binayarang tax when there should be kasi malaki yung income niya sa ibang bansa, right? But, you know, since I'm not the firm owner, I don't have a say, but I don't have a final say. But because we are, we're working as professional, although we follow instruction, we just don't stay silent, no? So, we still disclose kung ano ang ating own interpretation sa mga bagay-bagay. So, yan lang. Share ko lang sa inyo yun. In your case, magandang i-practice din yung foreign earned income exclusion. Again, may mga firms na nag-specialize in that area. And if you happen to work for that firm, yun lang yung foreign earned income exclusion. Hindi siya ganun ka broad, right? But yun nga lang, magiging limited yung knowledge niya. Anyway, so I guess we're down to last video. So 411 lang naman, and then we'll tackle these lang din, the multiple choice questions kasi may additional information din to, but we'll do it tomorrow. So we'll finish this video. And again, if you guys have been following the course since we started, and later on, if you're seriously considering taking the EA exam, we're actually down to, I'm gonna just show you for emphasis, okay? Because we're following the GLIME resource. See, 14 lang yan. We're already down, almost down to 2, right? So, tatapusin natin to. Mahaba pa naman ang time. I'm looking at maybe having this course until maybe August. But the earlier we finish, the better, so that it also prepares you for opportunity to get hired maybe as early as September, kasi diba busy in September and October. But if not, there's November and December. Yeah, so that's it. May mga questions kayo. We'll wrap it up 6:35 because I also have to go, guys. And then announcement for tomorrow, though, I'm not sure if I can spend time because I'll be flying to Colorado, right? And I'll have to be at the airport before 10. So yeah, I may not be able to come. I will just have to, but if ever I could, I'll message like an hour before the class starts so that you can also prepare. Okay? So it's not yet certain that I could come, but I will let you know. Okay, you're welcome, bro. Second, if you can have a soft copy of the quizzes so we can review. Thank you. Sure. Remind me. I will ask Marielo again to put a test bank and with the answers on the quizzes, and then maybe put it on the G sheet so that we can share it to you guys. Because while meron kayong access na doon sa test bank ng GLIME, I realized some of the questions that Marielu included in the quizzes are not necessarily in the GLIME. Kasi I told her na what you do, kasi teacher to si Marielu, just for your information, she's a teacher, she works for me part-time, and then I would ask her to just watch the videos nung class natin or nung session natin, and then from there, she formulate questions, right? So yun. Some of the questions I think she lifts from the GLIME, and some she did it herself, and probably with the use of AI and other online resource. So yeah, we will share that with you. Di ka ba nag-SS? I have a copy. Wow, grabe naman to si Miss Josie. Napaka galing naman. But yeah, if in case you need, we will compile a G sheet for all the questions for you guys. Yeah, you're welcome. Coach, individual sang course natin or until business returns. My goal is to complete everything, individual and business, right? So inuuna lang natin yung individual kasi ito yung pinaka-common, and it's also good for those na walang background at all, right? Then business is susunod natin after No, after nung personal, we will cover business, especially because marami sa inyo bookkeepers. Although open pa din naman yung business course for everybody, no. But for those may mga bookkeeping experience, napakagandang aralin natin yung business return para by next year pwede nyo i-offer sa mga bookkeeping clients ninyo na kayo na mag-prepare ng return nila. Okay. Alrighty. Kaya nga, I make it a point to really have it on a daily basis para mas mabilis nating ma-cover yung individual and then we can proceed with business. Right? So kaya kahit hindi ako fan ng magising ng early morning, I force myself to. Coach, pwede ba yung link ng test bank? I don't know if maybe you can share, guys, kay Nelia yung link ng test bank that I've shared before. Para lang mas mabilis kasi I have to go after this. Kasi I have a soft copy of the quizzes. Yeah. All right, I guess that's it. It's 37. So thank you guys for today. I'll see you guys again, hopefully tomorrow. Okay. And then I will ask Sam and Kendall to hopefully join us this week. Kasi I will be staying in Sam's place from Wednesday until Sunday. Diba? Mahaba-habang couch surfing yung gagawin ko. But yeah, he knows that I'm doing this course. And I would love for you guys to meet both of them. Alrighty. So I guess that's about it for today. Again, thank you so much. And you all have picture daw pala. 52 pa tayo. Galing naman. I think we were 58. So some people really stayed. So yeah, sige, let's take a picture muna. Kasi madami-dami pa tayo. Sana nga yung aking monitor ng mga participants. Hindi ko na makita. Sige lang. Hindi na mag-take ng picture. I don't see you guys really. I don't know. I'm lost. I don't see that screen where I see all the participants. But then again, yeah, pa-picture na lang kayo. And then I'll count 1, 2, 3 and then pasend na lang ng screenshots sa GC. Alright guys, 1, 2, 3. Say cheese. Alright, I guess that's it. Nakuha ba? Nakakuha ng picture? Alright, I really have to go, guys. And again, I thank you so much for today and I'll see you again next time. Bye-bye. Oh, yun, nakita ko na. Bye-bye.
Meet our free US tax preparation course brought to you by the Borderless Accountants. Now, on its first month, we are inviting you to join our community. Live training, reputable tax firms as resource speakers, recorded, replayable at higit sa lahat, libre. To join, like and follow our official Facebook page, join our Facebook group for important updates, and fill out our Google form to be included in our mailing list. See you there!